Alright everyone, welcome back to the channel. So, in this episode I'm going to be talking about Bitcoin and its correlation to the money supply. Namely, we're going to be looking at the BTC USD pair and we're going to be dividing it by the M2 money supply. Why would we do this? Well, simply, the M2 money supply is a great measure of the money in the US economy, and subsequently, when we divide the price of Bitcoin by the M2 money supply, it gives us a better interpretation of Bitcoin's real growth. With that being said, let's jump right into today's video. Now, I have just made a video about the money supply, talking about what is the money supply in more depth. What is the M0, M1, M2, M3? So if you do want to learn more about the money supply before you do jump into this video, I will leave the link for that down below. That will definitely provide you some useful context if you're not already familiar with the money supply. So let's remove all of the drawings on these charts that we've got and let's jump right into this. Now, I'm namely going to be looking at Bitcoin's growth from its previous all-time high in 2017, December 2017 namely, and we're also going to be looking at its growth from the 1st of March 2020, which was the pandemic bottom. Why am I looking at the growth from these regions? Because I want to be talking about how the money supply of the M2 has affected Bitcoin's growth from its previous all-time high up to its new all-time high. And I want to be talking about its growth from the pandemic scare all the way down here in March of 2020, because that is when the money printer really started to get gearing up in the US economy. You can see, if we look at March of 2020 over on the Fred M2 money supply, you can basically see where this line in the sand is. There was a massive increase in the money supply due to the pandemic. And subsequently, when we do look at Bitcoin USD divided by the M2 money supply, it tells a very different story than BTC USD. So first of all, let's look at Bitcoin's growth from cycle top to cycle top in 2018 to the current all-time high all the way out here in the 1st of November. So what you will notice is the growth from Bitcoin's previous all-time high in 2017 all the way up to 2021. We had a 242% increase from cycle high to cycle high. A lot less than people were expecting, but nonetheless very impressive. Now, when we divide BTC USD by the M2 money supply, once again, another way of saying this is we are accounting for inflation. When we do look at the growth from cycle top to cycle top, what do you think is going to happen when we account for inflation? Well, when we do account for inflation, you will see that Bitcoin has only moved up 127% approximately. So why does this make sense? Well, it makes sense because if you've got X amount of money in the economy and you double the money supply, as you can imagine, there's only a certain amount of goods in that economy, and namely there is only ever going to be 21 million Bitcoin in the economy. So subsequently, if you double the money supply, it's very likely that the price of energy, food, houses, Bitcoin and commodities, the stock market, everything will go up. And this is why we can see that when we're looking at real increases, so this is a concept in economics, real prices, real wages, real terms, you can see that in real terms, we've only moved up 127%. So briefly talking about real terms, real percent increases, imagine it like this. Let's say you get paid $1,000 at work a month, and then they double the money supply. So as you can imagine, if they double the money supply, let's say hypothetically in a closed economy, the prices of houses double, the prices of food doubles, your phone bill doubles, everything doubles. So what does your work do? They give you a 90% increase in your wages. So with that being said, you would have had $1,000, and because they've given you a 90% increase, you would now be getting paid $1,900. And let's say the original basket of goods that you buy every month, just to make things super simple, is $1,000. As you can imagine, as the economy or as the money supply has doubled, what this is going to mean is that the same basket of goods, your phone bill, your rent, your house, all of this stuff is going to double in price. So, what does this mean for the same basket of goods that you can buy? Well, let's picture it this way. if you're able to buy one basket of goods for $1,000 and they increase the money supply by double, so that same basket costs $2,000, but your wages are only $1,900, what is this going to mean? You've got a $1,000 increase in terms of the same basket of goods, but you're only getting $900 extra in terms of relief, and this would mean that your real wages would be down by $100. And this is exactly what we're seeing in the M2 money supply. So when we are accounting for Bitcoin's growth, looking at when dividing it by the M2 money supply, you can see, accounting for inflation, Bitcoin has only moved up 127% in real terms compared to 242%. You know, I say a modest 127%, you know, boohoo, that is very, very good, at least compared to the stock market and other asset classes. So, as we can see by looking at the M2 money supply, as you can imagine, the growth of the dollar, or the supply of the dollar, should I say, has been drastically increasing since its inception, and subsequently it's basically been on a long parabolic growth. But you can see the parabola really started to snap up in March of 2020 when the pandemic came. Lots of businesses had to shut down, lots of stimulus checks were printed in order to give to US citizens and other people in need of that extra money, and subsequently the money supply, the M2 money supply, absolutely shot through the roof. So let's look at what happened with Bitcoin's growth from the pandemic low, because just like you can see down here, this was when the pandemic scare came and the money printer started going brr at this moment in time. So what was Bitcoin's growth from the bottom of the pandemic scare to the top? Once again, a very modest 1,700% increase. Very, very nice, once again, from the pandemic low to the new all-time high. But what do you think is going to happen when we account for the money supply that's been absolutely exponentially increasing? So we know that in terms of US dollar terms, we've moved up 1,700%, but let's look at how much it's increased in real terms. So when we account for the money supply, you can see we've only moved up approximately, once again, approximately a very modest 1,200% instead of 1,700%, representing about a 500% difference, or about another 5x if you did buy from the cycle low. So once again, this is very, very interesting. And what you can see is it doesn't necessarily correlate to the exact top. In fact, it starts to correlate to the massive capitulation that we've recently been seeing. But if we do zoom into the growth of the money supply, specifically in the past year or so, you can see that since March of 2020, which correlates to round about here, you know, since then, the BTC USD pair has so far capitulated about 64%, and it's currently down, as of the time of recording, 58%. But when we look at when the growth of or when the supply of the money stopped increasing, you can see once again 63 and 58%. So what does this tell us? This tells us that when the Fed stops printing, when central banks stop increasing the supply of money, it means that the BTC USD and BTC USD divided by the M2 is subsequently going to start catching up, because we're dividing it by the M2, and if the M2 isn't, you know, moving too much, it would kind of be like dividing anything by 1. So as you can imagine, if you divide $100 by 1, you're going to get $100. And it's going to be the exact same. So with that being said, let's measure from the peak and see if there's much difference when we do account for the slight increase in the money supply that we did witness from Bitcoin's all-time high. So let's find Bitcoin's all-time high. This was up here on the 1st of November 2021. If we refresh this and find from the 1st of November, so this was round about here. So if we take out this data, you can see November, we were slowly increasing until, like I said, we did have a big drop. So when we do look at this, you can see as it wasn't increasing too drastically, there's not going to be a very large difference in the percentage between what is going on between these two charts. And subsequently, we can see BTC USD capitulated almost 75% so far. And when we look at BTC USD divided by the M2, Once again, this is almost the exact same. One of them's 74.8% and one of them's 74.77. Bear in mind, this is an approximation because I'm sure if I zoom in, I could have drawn this maybe a tiny bit more accurately, but nonetheless, we are generalizing here. We're trying to see, the bigger pattern. We're not trying to get a very specific data point. And what you will notice is that these are basically exactly the same. So let's wrap up the video and talk about the market structure when we do look at Bitcoin accounting for the money supply. So when we look at BTC USD, like we previously highlighted, from the break of the all-time high, it was a 235% increase. However, when we account for the money supply, bearing in mind, once again, that a lot of the inflation started kicking around at this moment in time. So when we do measure from the previous all-time high, we're having to account for the actual real increase rather than the US dollar increase. This only moved up 125%, this moved up 234%, and subsequently when we look, once again, getting rid of these because we've already talked about it, just a refresher, when we look at the market structure, what you will notice is when we do not account for the money supply, Bitcoin is currently coming down and backtesting its previous all-time high. It's probably going to be very different by the time you're watching this. If you're watching this in a week, if you're watching this in a month, God only knows if this ages well and people are still watching this in a year or so. This chart is going to be completely different by the time you are watching this. However, as of the time of recording this, when we are not accounting for the money supply, Bitcoin has seen zero growth from December of 2017 all the way over to now. So what we know from this is from 1,643 days, Bitcoin has seen a 0% gain, 0% loss, meaning that it has had no growth since 2017 all the way over to the current period in time now. However, when we account for the money supply, once again, a refresher, why do we do this? Why are we looking at Bitcoin divided by the M2 money supply? We are accounting for inflation and subsequently we are looking at the real increases. We're looking at the real percent increases. We're looking at the real percent decreases. Once again, just like I talked about with that example of if you're at work, if you've got a 50% increase in your wages, but inflation is going up by 100%, that simply means that you may have got 50% extra dollars in your pocket, but what those dollars can buy is less. So subsequently, if inflation's 100% and you get a 50% wage increase, your real wages are down 50%. So when we do account for the inflation, what you will notice is we have not had zero growth over the past 5 years approximately. What we've actually had is negative growth. And how does this make sense? Well, what this means is that obviously when you are increasing the money supply, it makes sense for everything to go up. Even if you've got things like chairs and food that you would buy very commonly at a grocery store or at Walmart or wherever you would buy these from, all of the prices of those are going up in US dollar denominated values. But when we are accounting for the money supply, you can see that Bitcoin may have had zero growth when we're not accounting for the money supply, but when we are accounting for the money supply, we are actually down 37% approximately, which is very interesting. And what does this mean? This simply means when we're accounting for the money supply, Bitcoin has not grown as quickly as we would have wanted to. It has not gone up as euphorically as we would have wanted to. And it's actually gone down in the past 5 years, which is actually something that we've not seen before. There has not been this level of inflation in the US for forever, really. I mean, obviously there's been high inflation before, but what we're witnessing right now is basically a parabola in terms of the amount of inflation that's coming in the economy, and subsequently, once again, the price of everything goes up. But in terms of what Bitcoin is actually doing, in terms of real prices, meaning if you bought one Bitcoin 5 years ago and you sold that Bitcoin, you may have been able, let's just make it simple, you may have been able to buy a BMW with that one Bitcoin because, you know, as you can see here, the price of Bitcoin has not grown at all. So if you simply sold the Bitcoin, that would be $20,000. Let's just say hypothetically, you'd be able to buy one BMW with that. But now when we've got all this inflation, the prices of cars, food, all of that is going up. And subsequently, you can see if we're looking at this, and let's just say once again, one BMW equals X amount of money, we now have one take away 0.37. So once again, that is a percentage, 37%, meaning that hypothetically, once again, giving you the most simple explanation as we possibly can, if you had X amount of money and that one Bitcoin was able to buy X amount of goods, you are now only able to buy 0.63%, in other terms, 63% of that same basket of goods or the same car or whatever you are looking at that moment in time. So this is how Bitcoin is affected by the money supply. As you can see, in the short term, when we do see these massive parabolic increases in the money supply, in the short term for Bitcoin, this will equate to a large increase against its US dollar denominated value. But once that inflation starts kicking in and settling in with things like the CPI, which is the Consumer Price Index measuring the inflation for a common basket of goods bought by a common consumer, you can start to see that once again, inflation starts to settle in the mid to long term, the growth starts to diminish, everything starts to become more expensive, and subsequently you may be seeing high growth in US dollar denominated terms, but in terms of real terms, it is not growing as fast as you think, and when it comes down, it is going to come down a lot harder than you think. So that's all I've got for you today. Hope that gave you a positive insight on how the money supply affects Bitcoin. Once again, this is a simple one episode update that I have supplied on my educational playlist. By the time I've uploaded this, this will be my 24th educational video. So if you do want to learn everything about Bitcoin, everything about trading, how to read charts, how to put moving averages on your chart, how to understand bullish crosses, death crosses, EMA ribbons, Fibonacci's, Elliott wave theory, I provide all of that stuff on my channel for completely free. That's all I've got for you today. As always, cowboy out. Peace.